sure when people give you information, they give the full detail, because I seen a guy, and I know I'm going off a little bit, but I keep thinking about that video. That man said that when you put money into the bank, he said, yeah, go get a $50,000 credit card and get 3 of them. That's not guaranteed that you're going to get $50,000.
Right, we all have.
Like, man, how many people will have it?
Right.
Like, he said, yeah, you and your partner get $50,000, three credit cards, $50,000 each. That's $150,000. Now, when you combine it together, you got $300,000. That's not guaranteed. And then a lot of people fall for that.
Right. Don't forget your point now.
But what was I saying? And then that's the dude that's going viral. But when you have information that's
real
correct, that's going to help you, that's not going to put you in prison for trying something crazy.
Right.
2 views.
Right. You know, that video is ridiculous.
Won't even get 200 views because people want the juicy information. People want the fairy tales. You want me to tell you to put $10 in the infinite banking policy, then borrow that out, and you will get $1 million and buy a mansion. That's what the information you want. You won't share or like this information. Okay, so we're back again. Episode 5. We're cranking them out.
Mm-hmm.
So this episode, we're going to be talking about what? What you want to speak on today?
So today we're going to be talking about infinite banking.
What about infinite banking you want to talk about?
Infinite banking, the benefits, how it should be structured. You know, we want to give you the behind the scenes information that you should know.
So we just want to dial it back a little bit, you know, just give them the foundation of infinite banking, because a lot of people still not understanding it.
Right. A lot of people still don't understand it. So we do want to dial back.
Because it's a beautiful product, man, because a lot of people be utilizing it. It's new information to us, but it's something that's been utilized for years.
Right.
You know, like to give an example, like I put out videos with Candy Barris with SWV.
Mm-hmm.
You remember her?
Yeah.
She put out a video years ago talking about how her financial advisor had set her up with infinite banking, and she didn't even understand it.
Right.
She just went along with what he said. She was putting the money up in there.
Right.
And then she said by the time she looked up, when her daughter got older, I believe, she said it was like $10 million within that policy that she could borrow out.
Right, exactly.
And then you got like the most famous video with Waka Flocka.
Mm-hmm.
You know, when his financial advisor taught him about it, he said, man, I just throw $7 million in a policy, borrow from that, and spend my money like that. He said at first he looked at himself as an idiot.
Right.
So when you look at us today, we the ones that don't have that understanding how to use this. So we want to dial it back so you can get the understanding of what is infinite banking and the importance of it.
Right. Hey, y'all. So I know you want to know how to build and grow generational wealth tax-free. Well, look no further than here. Yes, here, because guess what? We have our course, How to Become Your Own Banker, in the link below. So click the link, purchase our course today, and don't forget to let us know what you think. Bye, y'all. Right. So we're going to jump right into it.
Dump? What you trying to dump?
I don't know, but we're going to jump right into it. So I want to ask you so that you can give your perspective.
Come on.
What is infinite banking, and can you give me some of the benefits?
So that's a good question, because infinite banking is like when you're taking control of your money, like you're getting that control from the bank. And then let's say if it's a savings account, you're putting that money within your control. You're putting it in a well-structured whole life policy, specially designed for you. And then it also gives you that great protection. Like, say for instance, if you're sued or something like that,
right?
If you're sued and let's say it's child support, anything that hits you, can't no one touch that money.
Right. Now it is state specific, so it depends on what state you're in.
Okay.
With the protection, so you just got to check your state guidelines, but it does provide that protection. From those creditors and bankruptcy.
Yeah. So it's like, okay, like I have more protection and control of my money if it's in a well-structured whole life policy versus if it's in a bank, and I'm not earning much.
Right. Okay.
So some of the benefits, I did forget that you get a appreciation, that guaranteed appreciation on it.
Right.
You can leverage your policy.
When you say leverage, what do you mean by leverage?
So it's like, okay, one of the components is, okay, if I'm let's say I put $10,000 into a policy, I've earned a death benefit unlike any other investment component. I've earned, let's say, tens or $100,000 worth of death benefits. So that's like your end, like when it comes to like the detail of the death benefit.
Right.
So let's say I put $10,000 within that policy, like, and I'm a 30-year-old female.
Right.
What potentially, like, and she's healthy, like what would my potential death benefit look like?
So $10,000, a 30-year-old female, I would say at least $700,000 to $800,000.
So
of a death benefit.
So that right there, I brought $800,000 worth of a death benefit.
Right.
I can't get that with a 401k or my regular savings account or any type of investment product that you have with the bank.
Right. Okay.
So, and then another way I can leverage it is I can use that money, that cash value. I can leverage that cash value and buy like a hard asset like real estate or invest into my business.
Okay. All right. So you can leverage it utilizing like real estate or your business.
Yeah.
A business. Okay. In case you like a trucker or something, for example, and they continuously buy maybe a new truck every 4 or 5 years. They can utilize the money in the policy to do that, right?
Right.
Okay. So for whole life insurance now, because, I worked in the field, when it comes to the benefits of infinite banking and it's built with whole life insurance, I know that there's compound interest that the policy earns. So can you tell me a little bit? I like your idea of compound interest, the way you explain it. Can you explain that to me?
So compound interest, like when you learn about like a guy called Albert Einstein, he said compound interest is like the eighth wonder of the world. I didn't even understand what he meant by that. And then so I'm looking at it, I'm researching it, and then I'm like, okay, compound interest is something that's interest that's earned upon interest. So when you take something as simple as a penny, that's the smallest payment that you can give me. So when you take something as small as a penny and it's compounded daily for 31 days, that's being doubled every single day. I used to ask people, I was like, hey, if I take a penny and it's compounded 31 days, how much money did I earn?
Right.
And then you'll hear a lot of people, they'll be like 30 cents, 32 cents, 62 cents.
Yeah.
You're way off.
Right.
You're way off. When you take a penny and it's compounded for 31 days, that's interest that's earned upon interest, and that's doubled daily. That's almost $11 million a penny, 1 cent. That's the power of compound interest.
Yeah, that's very powerful. And this policy compounds annually.
Yeah, so it doesn't earn daily, but you get that, that benefit of that policy, like it compounds annually.
Right.
So my money is growing annually with compound interest, and the dividend.
Right.
And it's all growing tax free.
Okay.
Because a lot of people will mistake saying that a dividend is taxed.
Right. Okay. Well, before we get to the dividend is taxed, I want to ask you, what is a dividend? For people who don't know what a dividend is, because a lot of people haven't heard about a dividend. They haven't been in stocks and different things of that nature. So what is a dividend?
A dividend is money that's earned from being a mutual owner of a company, just like how you were saying with stocks. Like a lot of people invested in stocks.
Right.
So like when you're a mutual owner, you will get paid a percentage, a portion of what that company earns.
Right.
So that's why a lot of people like to invest in stocks. But the thing is, like, you'll see companies, like I invested money into stocks before. Right. I still remember that company, ET, Energy Transfer. And I invested money into this company, and we did the research and things of that nature. And then it was like I believe every $10 you'll earn 60 cents in dividend.
Right.
And then like when it was time for that quarterly payment, they cut the dividend. It went from 60 cents to 10 cents. It went from 60 to 10 cents. I'm like, man, this is not what I want. And then the thing is, they was like, man, don't worry about it. It's just a paper loss. It'll come back within a year time, potentially.
Right.
And then, okay, I'm losing on my dividend. And then also the stock, it went from a value of $10
right
to $6.
So basically, you're saying the up and down of the stock market, it fluctuates.
Yeah.
It's not consistent.
It's not consistent. It's not guaranteed.
Right. It's not guaranteed.
And
hey, you, yes, you, that business owner that's bringing in 6 figures or more, but your bottom line is not doing it. And my real estate investor that's over leveraged with your time and your capital, not knowing how your properties are performing. Continuing in this horrible situation will cause you stress and more stress to the point where you lose your business. You need to have a trusted accountant like myself that will take on your stress, give you a clear vision with a strategic plan so that you can save more on taxes and increase your bottom line. With my detailed business analysis, I will help you achieve your financial goals. How am I going to do that? I'm going to take the stress away from you while giving you back more time. Contact Everlife Tax Services today.
My money was held up. I couldn't, like he said, it's a paper loss. Paper loss meaning if you leave it in there, it will eventually come back.
Right.
So I couldn't pull my money, and if I did, I have to take that loss.
Okay, right. You'll take what was left over.
Yeah, I have
loss.
to take what's left over.
Okay, so when it comes to dividends from a mutual owned insurance company, when you're a mutual owner, you get that dividend payment yearly.
I get that dividend payment annually, which is yearly.
Yeah.
And then I don't have to worry about if they're if it's gonna rise or fall.
Right, because it's guaranteed.
It's guaranteed.
So even if, and I just want to make sure we clarify this. So with a whole life insurance policy, you have a guaranteed portion that's going to grow irregardless of what's happening.
No matter what. And then, but I ain't mean to cut you off.
No, you good. I was going to say, and then the insurance company gives you something extra on top of that, which is that dividend.
That dividend, just like if I want to invest in stocks.
Right. So if the company performs well, they give you
that dividend.
A dividend to your policy that's going to take it up even more than what your guaranteed growth is already going to do.
And then the thing is, like, it's gonna perform well because everyone needs life insurance. Mm-hmm. So it, like, you know, so buy that insurance company, and then we're gonna get into it, like what type of insurance companies you want to use.
Right.
So when we structure the policies, we make sure we use the right companies for that, because you'll have companies that, you know, that's not performing well, but you want to make sure that you have a company that's been in the industry at least 100 years.
Yes. We structure our policies for our clients with companies that's been in the industry over 125 years. Mm-hmm. And they have never not paid a dividend.
That's the point. They never missed, but I've been in the stock market where they missed.
Right.
You know, I didn't get my pay. They said 60, I got paid, I believe it was 20 or 10 cents on every $10.
Yeah, that would be very disappointing. Very disappointing.
It was. I mean, I'm losing. And then they say it's just a paper loss. I'm like, man, I'm not trying to. Man, it's like a second job messing with the stock market.
Right. No. Probably more demanding than a job when you watching your phone consistently. That's all what I was doing. Long.
I mean, you seen me.
Yeah,
I did. Me like, man,
when are you going to get out of that phone?
Yeah, it was crazy, man.
But look, I didn't want to forget about this. When it comes to the dividends, some people like to say that the dividends are what? They like to say that they are taxed, right? So just to provide a little information about that. So your dividend is only taxed if you are taking the dividend as a payment, right? So for example, a whole life insurance has a few different aspects to it that creates that whole life insurance, right? So you have your premium, which is the amount of money you pay each month or each year or each quarter. Then you have inside the policy, you have cash value, you have a death benefit. And then if you're structured properly, you'll have dividend payments along with, you know, your guaranteed interest.
Yeah.
So with the dividend payment comes from the company once it performs well, right? Now, this is what I don't want to forget. The whole life insurance is made up of a base premium and then a PUA rider. This is a very important piece in the whole life insurance policy.
Right.
So your PUA rider is called a paid up additions rider. This rider is what allows your policy to grow fast, right? So with the PUA rider, once the insurance company pay you dividends, you're not going to take it because we're going to structure it appropriately. You don't take the dividend as payment each year. So they're not going to send you a check. They're going to give it, they're going to reinvest the dividend back into your insurance policy. So your insurance policy is going to purchase smaller policies. For example, just as a visual for you to have, it's going to purchase smaller policies, which is going to give you more cash value and more death benefit, meaning your policy is going to continue to grow every single year. So every year the insurance company give you dividends, your cash value and your death benefit is going to increase.
And that's something that needed to be explained, because you'll see financial advisors, a lot of people that's on YouTube, TikTok, mis-explaining infinite banking.
Right. Yes.
And don't understand it. They just going off of information that they seen on these social media platforms.
Yeah.
And then they're so passionate. And you will see you'll see these guys that's up there that have a name for themselves, don't really know what they talking about, and giving out misinformation and people believing it. And it's affecting people to get something that's very beneficial to them.
Yes.
Like a guy, JT Pocket Watcher. He's on the internet talking about, dividends are taxed. If you don't understand what you're talking about or how to do it, it will be taxed.
If you don't understand how to structure the policies and you're taking that dividend as payment to you, then yes, it will be taxed. But the key thing is to have the dividend to be reinvested back into the policy. That's how you get around paying taxes on the dividend.
And that's why you want to understand you want to make sure that you're talking to a practitioner, an infinite banking practitioner. And if you're not, they're not going to understand the concept.
Yeah, it requires a lot of education. It's nothing that you can fly by and
say,
understand by
that.
night. Yeah, let me tell you, I was in insurance in the industry a whole nother way. So for 10, 11 years, I can't even remember the exact number of years, but at least 11 years in the insurance world. And I learned insurance the opposite way. So when you'll have a lot of people that think a certain way about insurance because of how we were taught, but we never learned this side of it. We never understood this. There's tax codes in place for this specifically.
Right. And those tax codes show you you'll see these people, the ones that do have a degree in what they're doing.
Yeah.
And then you'll have a lot of people that just really don't know what they're talking about.
Yeah.
But you let's say the ones that have a degree in accounting, things of that nature, they're misinforming people on infinite banking.
Yeah.
And then you'll have these people that they're in the tax industry, and they probably don't even know about tax code 7702.
Right.
And then when you read that tax code, it'll tell you that a well-structured whole life policy, it gives you tax advantages.
Right, it does. It's very important to understand those different aspects of the policy. So we gave you the basic information when it comes to a whole life policy, what's included in there. So you got your whole life policy, your PUA rider, and then your base premium. It's other things that's involved, but those are the main things as to regards to how your cash value and your death benefit is going to
And that's
grow.
another benefit that I wanted to explain, because you get that appreciation, that guaranteed value, and the leverage that we were saying. There's many ways that you can leverage your policy to build generational wealth. It doesn't stop putting the money in there and then just letting it sit there and grow.
Right.
That mindset comes from what we were taught with the 401ks, the stocks,
right,
and all that. You just sit it there and then let someone else control your money.
Right.
No, you take control of your money. So you get the guaranteed cash value, you get the leverage, you get the cash flow, And then you also get the tax advantages. Why you want tax advantages? Because you'll see that when it comes to like building wealth or anything, even if you're working at a job or anything, most of your money go back to the government.
Yeah,
from that taxes.
Yeah, percentage is going to go back in taxes. The tax advantages, for example, when you have this type of policy structure, because your death benefit is so large, so that's the reason why we have the tax codes in place, to make sure your policy don't become a modified endowment contract. It doesn't MEC, meaning when it MECs, that means, okay, hey, now you have to pay taxes to the IRS because your policy done fell out of this test that we have created.
So that goes into a question I want to ask you. Because you said a modified endowment contract, meaning that it has to be structured a certain way. Because it can, like, if it's not structured right, it's going to be taxed. It's just like, a 401k now or whatever.
Yep.
So how should a well-structured whole life policy built for infinite banking, how should that be structured?
Well, so you want to make sure you minimize the base as much as you can without the policy mecking. So it's technical when it gets to numbers and age and health when you're structuring it, but you just really want to make sure that you really reach out to a practitioner and you have them to structure it for you. But you don't want, for example, this may be a little bit harder to grasp, but with a well-structured whole life policy, you do not want to see 50-50. So you don't want to see 50% of your money going to the base and 50% of your money going to the riders. That's not structured appropriately, right? You following what I'm saying?
So because for the listeners that don't understand, what do you mean when you're saying the base? What is the base of the policy?
So the base of the policy is really the whole life insurance by itself.
Right.
Without any riders. And the riders I'm talking about is the paid up additions rider and a flexible protection rider. Those are what I'm talking about.
So I want you to explain to the listeners what is the base, because that's what a lot of financial advisors, anybody that's giving advice about whole life policies, that's what they're thinking about. That's what they really think that is being sold. Is like a base policy, like it's just everything like 100% base.
Right.
So explain what is a base so that people understand.
So a base policy is, for example, when you purchase a whole life insurance policy, they're quoting you for just the whole life insurance by itself.
Right.
There's no riders. A rider is something that adds additional things to your policy. So there's many type of riders, but for this example that we're talking about, the base policy is just the whole life insurance by itself. When you purchase whole life insurance by itself, your cash value really don't start building until year 3, and it's not going to be much. So that's the main difference right there.
Right, because I've seen it. I've seen the videos where they, it was this confrontational guy. He's saying, hey, the whole life policy is taxable. You should buy term and invest the rest. But the thing is, okay, if you're telling me to buy term and invest the rest, what if I don't know how to invest?
Right.
I don't have that understanding.
Right.
And then, okay, when I invest the rest, let's say I did pretty well. Where should I sit that money? And then it's like, okay, I sit it in the bank. And then it's like, it's basically dead dollars. That money is not working for me now.
Right.
It's working for the bank.
Exactly.
So I brought term, I invested the rest, I made money, I put it up in the bank. Now that investment that I made is about to be taxed. And then those dollars that's in the bank is working for the bank extra hard. Now it's not working for me.
Right.
So it's like, it's still like some holes in what he's saying.
Right. Yeah. I don't want to cut you off, but
go ahead, girl.
No, I'm not saying much. I'm just saying it doesn't make sense.
It doesn't.
You want to have protection. You need protection. So why not? Okay, let me try it this way. You know what I'm saying? It's more stable. You have protection. You have so many different vehicles in that one policy. It's a banking system. Okay, it's a banking system. Okay, I can use this for investments. Okay, not only that, if something happens to me, If I pass, my beneficiary is going to receive the death benefit. If it's $1 million, they're going to get it what? Tax free.
Tax free. If I have stocks, if I have stocks, let's say I die, I have $100,000 worth of stocks, and will it be easy for you to access that?
No,
wouldn't. Like, let's say I die, everything is in my name.
Well, no, it's not.
It's not going to be easy to access.
No.
So I have a bank account. I have $100,000 in my bank account. It's in my name. It's not in your name. Will it be easy for you to access it?
It's in your name, not my name. No, and that's a big problem we have now in the community.
And I'm saying these things because I have a whole life policy,
right?
And it's in my name. I have control of it, but I made you the beneficiary.
Right.
Will it be easy for you to access it?
Yes. If something happens to you, they're going to pay out to me.
Would you have to go searching for or jump over hoops to get this access to that policy?
Mm-mm.
They calling you.
Mm-hmm.
And it's tax free.
Right.
But the thing is, we've seen where it was problems with people trying to get access to a loved one's account.
Right.
That was in the bank.
Right, because a lot of people don't set up the bank account and say, hey, who do you want as a beneficiary? You don't set that up, but when you set up a life insurance policy, the agent or practitioner that you have is going to make sure who's your primary beneficiary.
Have you ever, like, give me an example of what you've seen, like, when it came to something like that? Like, okay, I have my money in this banking system, and a loved one died. What example can you give, like, that you've seen with that happening, so the people understand? Like,
it paid out.
In the bank.
You said the
bank, the regular bank.
Oh, the regular bank. No, if there's no beneficiary on that bank account, it is very hard to access those financials. You have to be a power of attorney. It's a lot of stuff you have to go through. A lot of stuff. So,
what's the example that you've seen with someone, like an actual?
Yeah, I had to go through it with my grandmother, So it made it harder for, the children to access, these accounts and things because she didn't leave a beneficiary on the account.
Right. And then the thing is, like, you're like with your grandmother, that situation, you saying, okay, the family is going through something right now.
Mm-hmm.
We just lost a loved one. We don't want to be trying to figure out how to get access to something to take care of her estate.
Right.
I don't have to worry about that with a policy.
Right.
But you will have these financial advisors pushing you away from these things.
Right. Yeah.
That's something that we have to understand. But when you have ill-advised information that's given to you and you don't understand, and then because you trust them, and then you probably don't even know where to go get the right information, it's kind of hard for you.
Right. It's just really education and understanding. Like, even if you can have a infinite banking policy structure set up appropriately, and then you may have money sitting in the bank account. This is just information, FYI.
Mm-hmm.
Put a beneficiary on your bank account. You don't never know what may happen to you. So if something happens, your family can't get access to it. That's just for FYI.
But how long, like, when it came to that situation, like, how long did it take for, like, y'all to get access to her funds?
It took, I know it took at least a few weeks.
And then
it could have been longer, but from, my vague memory, at least a few weeks.
And then the thing is, like, when it comes to bills, them people don't care that, okay, she's gone.
Right.
They still want their money.
Yeah, they do.
They still want things to be paid.
Yep.
And it's like, man, I'm trying to make sure the family is good, all these things, and then I still have to take care of these things.
Right.
And that's something, you want to be aware of. Don't let people talk you out of something that's very beneficial to you.
Do your research. That's the main thing.
Research.
Yeah, I know you hear what someone says, but do your research and understand first.
And that's why we created the course.
Yeah.
So you can understand the benefits of infinite banking,
Right.
how you can utilize it, and how it builds that generational wealth.
Right.
Because you can use that cash value for yourself while you're living, and then that death benefit is to pass down to that loved one.
Right.
So I want to ask you this question.
Mm-hmm.
If I want to get started, with infinite banking, how should I start? Like, what should I do first?
So what you should do first, one, this is the first thing I'm going to say. Download our free ebook.
Right.
Okay. So in the free ebook, we're talking, we're giving you information, but the ebook is going to give you some more, detailed information on how you can start.
That don't cost you nothing.
Right. With the whole life, is going to explain that portion to you, the whole life policy, how it should be structured. Just giving you some general
basic information.
Yeah. And we also, inside the ebook, we're going to put a coupon in there to our infinite banking course.
Yeah, we're going to give you a discount for listening to our podcast.
Yeah.
That's a thank you for listening to our podcast. Here's a discount to the course, right. And other little links.
Yep, other little links will be in there, but that's the main thing. That's how you can truly get started. And then once you read the ebook, it's not long. Then contact us, reach out to us, schedule your consultation with us, so we can move from there. We would love to talk to you. This is one of our favorite things to talk about is infinite banking. The education is the most important aspect of infinite banking.
I know. I love it because, like, when I found out about it, it blew my mind.
Right.
It blew my mind. Like, I'm like, what? Mm-hmm. And then I'm like, to come to find out, like, how long people been using this.
Right.
I'm like, man, because I had that same mindset. Like, when I was working jobs, I wanted a 401k because it sound good.
Right.
It sound like you're somebody when you have a 401k. Mm-hmm. But when I found out about infinite banking, I was like, oh, this is where it's at.
Right. Yeah.
You had something you wanted to say?
No,
it seemed like you was, because I wanted to get into the next portion of it, because we were speaking on like the financial advisors and like how they give misinformation.
Right.
So the thing is, I want to ask you about mistakes that, people, the understanding and the thinking that they have when it comes to infinite banking. So when you look into infinite banking, why is it like the people that believe in infinite banking, why do they look at infinite banking as a get rich quick scheme?
The people that believe in it, or the people that don't understand it?
No, they believe in it, but clearly they don't understand in it. So they'll look at like infinite banking as like some get rich quick scheme, like the video that we was looking at.
To be honest, the only reason why they look at it like that is because they seen it that way. They've been taught that way. And so they've been taught, hey, you put $20,000 in the policy, you're going to have $20,000 the first year. No, the first few years, you're going to have fees the first few years, but you still have access to cash value. You put in $10,000, you got access to $7,500. And then in year 6, let's say you put in $60,000. Well, year 6 come, you at $65,000. Mm-hmm. So as you can see, you done made $5,000 more so far than what you put in. So, back to your question, they look at it as a get rich quick scheme is because they're uneducated.
And then the thing is you have to think long term. Just like when people buy into dividend paying stocks, they think long term.
Right.
It's the same thing with infinite banking. Like when you put your money into a regular savings account, you don't look at that as, oh, I put in 100,000.
Right.
Oh, tomorrow I'm gonna have 200,000.
They're doing it as a long-term investment. So
just like if you put your money into a certificate of deposit, which is a CD or a bond or anything like that, okay, I put my money into this CD and I'm committed to it for 5 years. Right. I know that this is the percentage that I will make.
Right.
And then the thing is, you're cool with that. And it's tied up and it's taxed. You're cool with that. Right. But when it comes to whole life, somehow, like the guy, he was saying, yeah, you put in $300,000 into the life insurance policy. then you take out $250,000, and then you go buy an apartment building, get 50 apartments.
It was just horrible. It was just a horrible break. It was just ridiculous, actually.
And then people believe it, and then that's the dude that's going viral. But when you have information that's
Real
correct,
information
that's going to help you, that's not going to put you in prison for trying something crazy.
Right.
2 views.
Right. You know, that video is ridiculous. The most absurd explanation I have ever. It's one of the worst explanations I've ever heard.
Somebody that didn't lied about infinite banking. Infinite banking is a scam. 1 million views.
Right. It's just terrible, you know, and it's educate yourself. Stop listening to, you hear somebody because they viral, they say, oh, whole life insurance is a scam. How is it a scam? Because when you die, who's going to take care of you? Who's going to cover your burial? You know, do your research. Like, do your research. Get educated. That's the biggest
and then the thing is, when you educate yourself, and the thing is, you can educate yourself, and you still gonna have questions because this is a concept that a lot of people don't know.
Right.
But the thing is, you want to make sure somebody is applying the information that they telling you.
Right.
Make sure that person that you listening from is that something that you're doing? Right. Can you show me?
Are you practicing?
Is that something you're practicing? Because a lot of people talk that talk, but they really not walking it.
Right. We practice what we talk about.
We've been practicing it for 3 years now. Yeah. So the thing is, like, you'll see these people that's talking what they're talking. It's some information that they heard and this sounds good, and they be like, "Oh, I can go viral off of this."
Right.
But the real people know, man, what they saying is crazy.
Yes.
You know, and then they get 1 million views off of that, and people sharing it. Man, yo, check this out.
Yeah.
Like, man, what you showing me is crazy.
It is absolutely wrong. So yeah,
a lot of people will be millionaires right now.
For real. But you definitely want to. What you said is absolutely correct. You want to reach out to someone who's practicing what they're teaching. Whatever it is you do, mentorship, whatever. Are you doing what you're telling me to do? You know, that's how you know if the information is working.
Yeah, and when you done it, how did it work for you?
Mm-hmm.
You know, because I've seen like a lot of people like they'll have someone teaching them something, and it's something that they haven't done, or they tried to do it and it didn't work for them. And then what they'll do is they'll teach it and sell it to you, and then that's how they making their money.
Right.
So they're making money off of selling you misinformation that didn't work for them.
Mm-hmm.
We don't do that.
Yeah, it's a terrible thing, but yeah, we definitely don't do that. We're going to educate you first and foremost.
And then the thing is, they get the I gotta be honest, they get the gullible people, the ones that want to feel like that if I put $100 in something, I get 1 million.
Right.
You know, the ones that want to think that, you know, without trying to put in that hard work of, you know, losing a little bit of sleep, educating yourself,
right?
You know, getting the understanding of what you're doing. Mm-hmm. That you the one that's gonna lose your money. Mm-hmm. Because you just want to go off of what somebody say, and then then you lose out on a lot of money. A lot of people getting scammed and losing money because you just going off of what somebody say.
Right. Yeah, that is very true. Very true.
But another mistake that people make is not understanding, like, you can have these policies, and I said policies because if I create a banking system, I can have more than one.
Right.
So like that's another misunderstanding. People believe that, okay, I created one, this is the only one that I can have.
Right. You can have multiple.
So why would someone want multiple?
For example, you may want one created for your retirement.
Right.
Okay, I want this one created for my retirement. I want to fund it for 10 years, and then I want to stop funding it because it's going to grow after you stop funding it. So even after you stop putting money in it, it's going to grow by itself without you. So that may be for your retirement in 15, 20 years. Mm-hmm. So you can have one for that. You may have one. Okay, I need one. I'm a landlord. You know, I have different real estate properties. I want a policy created in case I want to invest some more into that. You know, you may have one for that. You may have a policy for personal, for your family. You know, you can have different policies for different reasons.
It's so many ways. That's
So
the
many.
reason why the word infinite is in it. Is so many different ways
Right.
you can create these policies.
Mhm.
Like the one that I like say for instance, like people talk about tax advantages. Like when it comes to strategies, is it okay if I throw one out there?
Okay.
And then so like say for instance, you have a business. And because we love like structuring these policies for business owners and
Right.
real estate investors. So say for instance you have a business and your child work for that business.
Right.
And then there's more details to it. Make sure when people give you information, they give the full detail, because I seen a guy, and I know I'm going off a little bit, but I keep thinking about that video. That man said that when you put money into the bank, he said, yeah, go get a $50,000 credit card and get 3 of them. That's not guaranteed that you're going to get $50,000.
Right. We all have.
Like, man, how many people will have it?
Right.
Like he said, yeah, you and your partner get $50,000, three credit cards, $50,000 each. That's $150,000. Now, when you combine it together, you got $300,000. That's not guaranteed, and then a lot of people fall for that.
Right. Don't forget your point now.
But what was I saying?
I'm trying.
Oh yeah. So when it came to like the children, and there's other details to it, and I'll be speaking forever on the podcast. But you can schedule a call how to do these things, like how you can hire your children. And the proper way to hire your children, and then it comes to, okay, there's a certain amount that you can pay them.
Yeah.
And then that right there, you get tax-free dollars. And then when you create these tax-free dollars, you can put it in an infinite banking policy for your child.
Right.
And then it's going to grow tax-free.
Right.
And then when it's growing tax-free, then when your child get to a certain age, or if you want to use it for them, then however you want to structure, however you want to split it. When you create this policy for them, trust me, they will thank you.
Oh,
they will thank you when they turn at a certain age, when you wanted to
want them to
have it, because you can create these policies for them, and then you can have full control of it.
Right.
You can have full control of it. Because I remember when we first started, it was a company that did not want, I'm gonna put that information out there. They didn't want to show us how to structure this policy. And then they made it difficult. They made it difficult for us, but we kept learning,
right.
And then we got connected to the right people.
I don't want to cut you off, but I want to dial back.
Go ahead.
So you're saying with the children, how they be showing you with the kids, they'll show you, oh, okay, hey, well, for example, Beyonce's daughter, Blue Ivy, they said she has, what they said, her income or however, or she's putting $6,000 a year into an IRA, right? And they're showing how it's growing. Well, you can do even better, right? Is this what you're saying with infinite banking?
Most definitely.
You can take whatever amount that you're paying your child, which that's a strategy. I have a strategy session that we do have a service for. But
you're missing out if you don't get that strategy session. All you're doing, you're losing money.
Right. So what you're saying is, instead of putting that money into that
IRA, yeah.
So take the money, put it into the whole life insurance policy that's structured as a banking policy for your child.
Right.
And not only does it not cap at $6,000, it only caps at whatever amount you get to pay your child for that year.
Bingo.
Okay. So when I do that, and let's say I do that for my child is 7 years old, and I do it for 11 years till they're 18, and let's say they want to go to college, if that's where what they want to do.
Right.
Then when I turn this policy over to them, they're going to have so much money into that policy because it done grew so.
It's 2 points I want to say about it, because when you do that for your child, you get those tax benefits, and let's just say is one child. That one child, the amount that you can do for a child is double the amount what you can do for a raw.
Right.
It's a little over double. So that, and then another point, you'll see other people that's educated, and in this, we were told that they give these out as gifts when the children are born.
Yeah.
When they're born.
And when they go off to college, So
they're
you could
already
imagine.
set.
Yeah.
They're already set. The college is already paid for. The child might say, hey, I don't want to go to college, Dad.
Right.
I don't want to go to college.
I want to start a business.
I want to start a business. Oh, here go the money.
Right.
Oh, and then you got more than enough in there. You got more than enough in there.
Not even here go the money. How much do you need? Give them a loan.
You can give them a loan.
Loan them the money from the policy. It'll teach them another skill set, how to make sure that they're paying back, give them an example of real life. You know what I'm saying? So they can borrow the money. It's just so many different things that you could do, but that's just an example. That's a little elevated.
It's it's so many ways that, infinite banking can help you. That's not all, us telling you this one concept about how to use it for children. It's so many ways to build generational wealth with infinite banking, and then and just like with the Roth IRA, what if somebody would have gave Beyonce their information? If she would have had that, because now she owed $2.7 million in taxes. Right. That she was given ill advice on how to write off her expenses. Mm-hmm. She's over there. Her main focus is performing. I really don't care for Beyonce or her music, but when it comes to the financial sense, like, she's focused on the music. Mm-hmm. She's not thinking about, taxes and all that stuff. She don't understand that. So somebody who she have on her team, that's why you want to have the proper team. Somebody wasn't doing something right.
Yeah, and not only that, about a lot of that is penalties. Yeah, and fees in that amount. So
and those penalties add up. So you can't just put things off. Right. And then another thing, because I missed it, when it comes to the children, let's say like with Beyonce, because we said that you can have multiple policies. Mm-hmm. You have more than one child. So I can have more than one of these policies. Exactly. So, with that Roth IRA, I'm not sure. Can I set up how many Roth IRAs? Like, I'm not sure. Can I have multiple unlimited Roth IRAs? I'm not certain about that. I've never heard that. Can I set up Roth IRAs? Like, I want to have 5 Roth IRAs and put in $6,000 each and get a $30,000 tax write-off. Yeah, I've never heard of that. Cause I remember you saying something about, like, once you hit a certain income, it starts lowering, things of that nature. Yeah, right? Once you make a certain income, income earners, it starts diminishing. Doesn't really help you on your taxes. But you can still have it, but it doesn't. It doesn't provide tax savings. Right. So, but I can take this infinite banking product. Don't even have to worry about, can I do this? How can I do that? Hey, all I have to do is, like, hire my children from my business. It has to be ordinary and necessary. Make sure it's right. Mm-hmm. You know what I mean? You can't say I have a 3-year-old and she a tax professional. You can't do that. It has to make sense. So that's why you want to make sure you have a financial advisor. Stop taking this advice off the internet. Yeah. Man, take that, couple $100 and get that tax advisor, or tax professional, and they will help you, do these things properly. Right. Exactly. Get the education, talk to the professionals for this stuff. Stop trying to do a DIY. You gonna end up like Blue off of what's his name? Off of Pretty Ricky. You gonna end up like him. I'm gonna be real with you. You gonna end up like him. He went to jail for them PPPs. Oh, Lord. You gonna end up like, I gotta be real, because people, man, they love crazy stuff, man. So I gotta be real with my people, because if I don't be real with you, I don't know who will. You know what I mean? Man, you stop thinking things is you can get rich overnight with $2. Right. You know what I mean? We gotta think right. It's gonna feel better to you when you know that, oh my goodness, I work for this. I got this. It made me more stable in my mind and my understanding, and in my business or your job, whatever, it's worth more when you earn it. And the reason why, because you'll value it more. And then the thing is, like, if I got $1 million overnight, I'm gonna feel like I can do it again.
Right.
And then that $1 million that I earned, good chance I'll blow it. I don't even know what to do with the money.
It's like
I got the money. Yeah, I got the money. I don't really know what to do with it. Okay, if I give you $1 million, what would y'all do with it? Right. Oh, I invested. I'll do this and that. And then a lot of people, I just save it. I'm gonna give you a tip. When you saving money, did you know you really losing money? Did you really know that? When you're putting money into a savings account, you're really putting your money in there to lose it. That's why you want to put it into an infinite banking policy. How are you losing? Taxes and inflation. Every single day, your dollar is worth less. It's that simple, because just off of us when we were children, you could buy more with $1 than you can today.
Yeah, I was gonna say, can you explain that for them? Because I don't think they.
Man, today's dollar is like 50 cents. Right? Like $1 today. Like, I have to have a $5 bill to do what I want to do. What I could do with $1 back then.
Oh, so for example, I know when I was younger, and I come to the city with my cousins, I come up here and on the ground I search for pennies, because I could get a penny and go to the store and get me a piece of bubble gum. It was only 1 cent, but now that same piece of bubble gum, I want to say it's like 25 cents to get a piece of bubble gum.
So it costs you 25. It went up 25%. Like, it's 25.
Yeah, depending on where you at located. 10 cent.
Let's just 25. Say 10 cent. It's 10 times more the cost.
Right. Yeah.
You can't go to I remember, like, because we from the country, like, you could go to the drugstore. Yeah. And then you can get the penny candy. Like, my aunt was famous for that. Like, she going there, she got her $1 or a couple dollars. She walking to the store. She then came back with 100 to 300 pieces of candy.
Lord have mercy. Now that sounds
That's
good
what she was doing in her brown bag, and she got those little.
No, the brown bag.
Ooh. Yeah, she had the brown bag full of candy.
Now I want a piece of candy. The little striped, little zebra looking candy.
What is that candy? It looked like the Tootsie Rolls, but it was fruit. What is that candy, y'all?
Oh, I know what you're talking
about. It looked like the Tootsie Rolls, the red, but it was the fruit flavor.
I don't know what it's
called.
She
used to come back with those things, man. She will have 100 to 300 pieces of that.
That's a lot of pieces.
Yeah, you just go there with $1 and you get 100 pieces.
Yeah, that sounds
it was the
good.
penny candy
with the paper bag. I remember, the paper bag.
My aunt was famous for coming back home with that brown paper bag.
Yeah,
and she poured it out, and then she splitting it up.
Lord, I get excited when I hear candy.
But let her try to go there today with $1. She coming back with 10 pieces. How, man? Because at minimum it's 10 cents for one piece of candy.
Right. Exactly. So it's hardly nothing.
I went from 100 pieces of candy to 10 pieces.
Right.
So the thing is, what I'm saying is, when you send your money in that savings account, or a lot of us, we like to hide it in our closet, under our bed. I'm sorry, I don't want nobody to rob me. But we'll keep it in our house.
Right.
And you don't even know, day by day, you're losing money.
Right.
You're losing money because you're saving it, and then if I don't understand how to invest or where to put it, save your money. Don't just put it into something and you don't understand. Right. You losing it even faster.
Right.
But what I'm saying is the value of that dollar, it decreases, because the only place I know where you still can get $1 value is like McDonald's. I'm not sure, I don't eat there no more, but I know at Wendy's, y'all done took the price of chicken nuggets up, man. You crazy, man.
I'm about to say, we didn't even eat there, so what you don't even know the price.
But I got people, man, y'all my people, y'all still eating there, and I can't get the 4 for $4 no more. You can still get the 4 for $4? Can y'all still get the 4 for $4? I know that they took the prices then went up.
I was trying to think, what is a 4 for $4? But I know the double stack and
yeah, man.
Okay, I used to work at Wendy's, so that's why I know. But
you know what I mean? Like, come on, man, come on. Like, y'all done took the prices up, man. And then the thing is, like, when you have that infinite banking policy, it fights against inflation,
right?
Yeah. Because I'm getting that interest, that compound interest, and that dividend. The thing that people are telling you is a scam is fighting against it because it's earning money on your money, and you can use it while it's still earning.
Right. It's liquid. You can pull that money out there.
For the real estate investors and business owners.
Yeah, it's very liquid. So that's important. I'm glad you said that.
Right,
so,
right.
This was good. This was good to get information to them about infinite banking. This was great, actually.
It's needed because there's a lot of false information on it. And then I'm gonna put this out there. I'm not sure. It may take 1 to 2 years, 3 years before like this video gets really known. But I put it within the first year. This video probably won't even get 200 views.
Really?
It won't even get 200 views because people want the juicy information. People want the fairy tales. You want me to tell you to put $10 in the infinite banking policy, then bar that out, and you will get $1 million and buy a mansion. That's what the information you want. You won't share or like this information. You won't share and like this information and give that. But one thing I did forget, this is Wealth Without the Gamble TV, where we teach you how to build financial wealth. You know, how to build generational wealth tax-free without putting your hard-earned money at risk.
That's right.
So I want to, before we end it, I want to ask you one last question. Because somebody might think that they can go to State Farm or Geico or anything to build these policies.
Right.
What companies should we use to build these policies?
You should use a mutual-owned life insurance company. For example, I'll give you a few. Mutual Trust is a mutual-owned life insurance company. Lafayette, that's another one. There are many different ones, but I'm just throwing out, to name a few, just a few of them. But you want a mutual-owned life insurance company. That is important. State Farm. I had a client say, "Oh, I have my infinite banking policy with State Farm." No, you don't. State Farm cannot structure this. They don't structure this. Prime America, they don't structure this. This is not structured with term life insurance. You need a mutual-owned life insurance company.
Right, because you will have these life insurance agents. They'll tell you that they create these policies and then they're selling you an IUL so they can make money off
right.
of it. And then they're going to get you with, it potentially can make more than what they're telling you with the whole life policy. Right. Or it's going to get 9 to 10% with a 0% floor. I've talked to the number one IUL company and they showed me how they was robbing people. Right. I'm going to put that information out there. They fixed a policy for a lady. She was putting in $60,000 a year for 30 years and she couldn't even touch it. If she touched it the first 3 years, I'm putting the information out there because a lot of people is being robbed.